Hey guys, this is Adam from dodjits.com and this is your video briefing for the 28th of June 2009. Now, like in every video, what we're going to do is we're going to start off with the S&P 500. What I also want to do in this video is I want to show you the volatility index. We're going to explain it a little bit in this video. And I just want to show you where basically we're heading. And the reason for that is because we did receive a massive bounce this week. It came on Thursday after a massive drop at the beginning of the week. So let's just go over to the chart, see what happened. Basically, we're looking here at the S&P 500. It's a daily chart. You can see this chart was taken from Friday, the 26th of June 2009. Now, basically, if you look carefully, we've bounced off our 200-day moving average, which coincides with this support area around here. Let's just bring that up a little bit. And our 50-day moving average, you can see we've received the crossover between the 50-day moving average and the 200-day moving average. The only problem is we're not receiving a lot of volume going higher. We did receive this massive candlestick on Thursday. Look at this. This was absolutely amazing. And if you look carefully here, we've got now this doji candlestick. A little bit of uncertainty still in the markets. We do look like we're holding up above our prior lows, which is this. And we've now formed another low roughly around here, which is roughly the same level. All coincides with our support level. So if you look carefully at the chart now, you can basically see that we've formed this range. And if you are a swing trader or you're a more longer term trader, so then there's really no point of just being in the market at the moment. I would wait for a break to the upside, especially if you're pro bullish patterns. If you think that the market is going to drop, then obviously this is going to be your key area. The 877 area, this is your key area. At the moment, we are still pro bullish positions. We are thinking of taking some more positions on the breakout to the upside. We're just going to have to see how it plays out this week. We've got the NFP results coming up, unemployment data. It's going to be a hectic week, a lot of volatility in the markets. But the only thing is whether it's going to cut it, whether it's going to break higher due to the economic data coming out. Because if you think about it, basically, analysts are now expecting a 9.6 unemployment rate. Now, according to what I'm looking at, especially according to the price pattern, I think that's already been baked into the market's price. And I don't think a jump from 9.4% to 9.6% is really going to have that much of an effect on the markets. I could be wrong, but then again, if you think about it, officials have come out, they've stated that they're expecting double-digit numbers, unemployment levels of 10%, 11%, and the markets aren't yet falling, are they? So that's something you're going to want to take into consideration. I think it's all been baked already into the market's price. We've got these trend lines. If you're a day trader, so then obviously you can use these lines. You can use the support level, the resistance level around here to just work on. But we are still in range. Now, the next chart that I've brought up is the VIX. And normally the VIX, we don't really show the VIX on these reports because it's a little bit more advanced. But I want to start to get you a little bit into it. And maybe you can start also to use the VIX as a type of indicator like we use it at dodjits.com. Now, basically the VIX is a volatility index. So what it's basically measuring, it's measuring the amount of volatility or in other words, the amount of fear in the markets. And it's normally known to think that if the VIX is high, then there's a lot of panic in the market, there's a lot of selling. And if the VIX is low, so then we're normally in a calm type of market. Now, this index itself is constructed via implied volatility of S&P 500 index options. So basically what it's doing is taking the broader market. It takes the implied volatility, which is a term used when trading options, and it calculates this massive index that what we use it for is just to gauge the market's fear. And like I told you before, if the VIX is high, we normally associate it with a very, very volatile market, panic, selling pressure, stuff like that. If the VIX is low, so then we're looking at a bullish market, we're looking at a calmer market. And that's basically normally how traders tend to use this index. It does become a little bit more complicated. We're not going to explain it in this video. You can take a look at Dodjits School. There's a lot more information about the VIX on the school. Basically, what I just want to show you on the VIX is like this. We've been in this downtrend, meaning that volatility is starting to decrease. We did find this support level around here. We bounced higher once, twice, and look what's now happened on Friday. Friday's session, we smashed through the VIX support level and we're starting to decline, which is basically very, very good for stocks. It's good for stocks, it's good for carry trades, it's good for bullish positions at the moment. So this is something you might want to keep a close eye on. We haven't received a full break of the support level, but it does look promising. In addition, we've got this coming down from roughly around here. We've got this massive bearish triangle that just seems to be giving way at the moment. We're going to have to take a look at Monday's session. We're going to have to follow it. Obviously, if volatility in the markets continues to decrease, so then this is going to be a very, very positive thing for bullish positions. Now, the next chart and the final chart that I brought up is the dollar index. And this time around, what I did is I haven't brought up a daily chart. What I've done is I brought up an 8-hour chart. And the reason for this is because I want to show you the price action around Friday's closing bell. Now, look at this. Basically, we've got this resistance level around here. This is our major resistance level. We had this bullish triangle pattern going along here, but it was in a downtrend. You can see that the trend at the moment is completely going down. We did find a little bit of support around this area. We headed higher. We touched our resistance level, which was also resistance roughly around here and here, and we just headed lower. We broke out of our wedge, out of this bullish type triangle. We headed back to test it, and now we've started to decline. And Friday's session really started to decline. The only thing what I do want to show you is look at these two last candlesticks here. We've got this one and this one here. And if you look at the tail of the candlestick, you can see a lot of bullish action towards the end of the session. You can see where the candle itself has closed. So basically what this tends to signal is that we could receive a little bit of a bounce at the open on Sunday night. I wouldn't read into this very, very much because we do seem to be heading lower. Again, we could receive a little bit of a bounce higher, but then again, because we've broken out of this massive pattern here, does look like we could possibly test our prior lows. All of this coincides obviously with the stock market. If we do receive some real nice bullish action on the stock market, so then yes, we could receive a lower dollar. Hope you enjoyed the video. My name is Adam from dodjits.com.